Markets closed the previous trading week on a positive note. Traders cheered at the news that the COVID-19 relief bill of unprecedented amount of $1.9 trillion has been finally signed in the U.S. The U.S. Treasury Secretary Janet Yellen said Americans would start receiving payments as soon as this weekend. Risk sentiment improved after Joe Biden ordered states to make all U.S. adults eligible for vaccination by May the 1st. The president also said that a slight easing of restrictions was possible so that Americans could gather in small groups to celebrate July the 4th. The U.S. dollar index, which measures its value against the basket of 6 major currencies, closed the week near the mark of 91.66, having lost 0.29%. On Thursday, the European Central Bank decided to keep its monetary policy unchanged, but said it would ramp up its emergency bond buying program in the next quarter to counter rising bond yields and support the economy of the bloc. On the other hand, the recent macroeconomic data from the Eurozone turned out to be quite optimistic. Thus, the industrial output growth and inflation rate accelerated in Germany. Amid this news, the euro gained ground and closed the session at 1.1952 against the US dollar. Meanwhile, the data from the UK was less encouraging, so the pound could not take advantage of its weaker American counterpart. The pound-dollar pair settled near the level of 1.3911 at the end of the weekly session. UK GDP contracted by less than expected in January, but industrial output fell for the first time since April 2020 and at a much faster pace. Exports and imports also decreased at a record pace as the Brexit transition period came to an end. In the meantime, Bitcoin reached a new record high. The price of Bitcoin hit the mark of $61,000 on Saturday, which indicates high demand for the cryptocurrency among institutional investors. Traders were also encouraged by the news that the Bitcoin-based exchange-traded fund will be probably launched on the Chicago Mercantile Exchange. On Friday, Brent futures settled just below $70 per barrel and were on track to start another week of gains. Oil prices are supported by production cuts from major oil producers and improved outlook for fuel demand amid a rapid vaccine rollout and government stimulus programs. On Monday, Brent reached the level of $71.38 per barrel, its peak value seen in 13 months after the attack on Saudi Arabia oil facilities. However, in the course of the week, the price went through a correction and closed the trade at $69.21 per barrel. As for gold, it's still in low demand among investors. Over the past week, gold tried to regain ground after a fall during the previous weekly session. Due to the rise in the U.S. Treasury yields, the price of the precious metal dropped to a 10th-month low. Later, gold managed to add 0.4% after a slight pullback. This was the biggest gain in the week that ended on February 12. You've watched the Combined Financial Review on InstaTV with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of all the latest events on financial markets. See you back soon.